associate from Global Industry Intelligence Platform, along with my trainer, Mr. Peter Bogma, who has international reputation and around 40 plus years of exposure in the field of risk, audit, and finance. Thanks for joining us. We sincerely appreciate your presence over here. So, viewers, this session is all about creating awareness regarding Treasury Risk Management Program, which is going to be held in Dubai at Grand Hyatt Hotel in between 18 to 22 September 2023. So, Mr. Peter, I got so many questions from our audience, and they all want to know what is going on and what are our upcoming events and what next.
Perfect. Well, I mean, welcome. I'm really happy to be here, of course, on this short session. So I guess you have a number of questions already that people have sent you. So I guess just ask me, and then so that all the people that have joined, you know, this quick conference. And of course, yeah, it will be recorded session, I guess. So that means it will also be it will be beneficial for other people as well.
Exactly. So one more thing, due to time limit constraint, because of the short time allocated for the scheduled 45 minutes online session, I kindly request that you answer the question as promptly as you can.
Okay, so you're gonna shoot the questions now, correct?
Yes, of course. Yes, of course. For the audience question and answer session, please wait until the end of the session to ask your questions.
Okay.
And I kindly ask all of you to please mute your microphone as well.
Except me.
Thank you. So I got first question on my screen, which is that how Treasury risk management evolved since you begin your career? Yes, Mr. Peter, I would like you to please answer.
Okay. Thanks for asking, because you know, many times people ask me that same question because they all think that you plan all these things ahead, and obviously that is not the case. You know, honestly, you know, I started in 1978, and even before that, I had no idea what I would be doing with my life. I had no idea. I mean, obviously it has changed dramatically. Okay, so I mean, if you know, if I come to think about a few areas that I think are, let's say, major changes. I mean, obviously the regulations were not that stringent at all. Okay, so markets were less liquid than it is today. Of course, there was not too much electronic transactions happening at the time compared to now. You know, it's a far cry, you know, from that situation. Okay, so you can say that we started with deregulations in the 70s and the 90s, between the 70s and the 80s, and it slowly became tighter and tighter. Okay, so that's one thing. Obviously, computerized system. Just think of it. You know, when I was trading foreign exchange, I was using a calculator that was mechanical. There was no digital calculators when I started. A bit later, you know, they were in there. So, of course, there was no internet, obviously. So no internet banking. And things, of course, changed big time in the current landscape with the fintech as well. It's more global today than it was at that time. Really, everything was centralized. You know, you had treasuries in different, you know, I was working in the beginning in Amsterdam. So you had Sweden, you had London, Stockholm, Frankfurt, you know, and New York. So those were kind of, you know, the major centers, and Singapore in some shape or form as well. So, of course, risk management today, very professional risk management environment. That time, no, not that much in existence. So, okay, so of course the payment systems have changed a lot.
Okay.
So
can I move to my next question?
Yeah.
Okay. So my next question, which I got on the screen, is that what motivated you to specialize in treasury risk management, and what are the most rewarding aspects of this career path? Over to you, Peter.
Well, again, it's a very solid question, right? So I really feel that, you know, the motivation came for me because I discovered value You know, I mean, a lot of people, they think like, well, what is he talking about, value? But value is something, you know, that you can create from nothing, something that is zero, like in you know, if you're trading or you're managing portfolios, there's skill involved. There's high skill. There's a lot of analysis involved, and you're creating a profitable outcome, hopefully. So it's about value. Okay, and that motivated me most actually to go in this field.
Okay, can I move to my next question?
Yes, you can.
Okay, very well said. It's about value, as Peter. My next question, what I got on the screen is that some of the most common misconceptions about treasury risk management that you have encountered.
Well, when you talk to people in the market, and especially in the early times, and then in the current times, I think the misconception is that everybody think it's a quick win. You know, they all think, okay, if I join Treasury now, then I'm gonna be, you know, I will have, you know, a very good, prosperous future ahead in a very, very quick time frame. So, so I just think that, you know, I mean, I started in '78 really as a junior, so I didn't make much money at all. I mean, basically, I needed to have time to progress and to learn. Okay, so in other words, misconception is number one is the quick win. It's not a quick win. Okay, I've come across some people telling me, "Oh, this is easy." You know, I learn a few techniques and off I go. But that is not true, you know, because beside the mechanics, you know, sometimes you can learn basically, you know, the tricks of the trade, but does it make you successful? No, not necessarily. So I think that is a misconception. It's not as easy as it looks. Okay, I mean, there's more sophistication. So again, it depends to the personality, the individual, the character, etc. But that is my belief that that is a misconception. Okay, so and also, and I came across this issue, especially when I was a younger, you know, treasury professional. Kind of when you want to get information, there are a lot of people out there in my time that didn't want to share the knowledge. They did not want to do that. Okay, so and what happened? They got this kind of inbuilt mechanism, like I don't want to listen to other people, you know. Okay, so for me, is that the misconception is that we should try to, you know, get the knowledge and take time rather than to say, hey, you know, I'm not interested. And, you know, there was a misconception, I feel, in that way.
Okay, very well said. Can I move to my next question?
Yes, you can.
Okay, my next question is that what role does risk management play in the broader context of an organization strategic decisions?
Yeah, I think, and actually, this is a bigger point. Actually, you know, if I think of it, I think that first of all, I mean, when I hear that question, you know, like what role does it play? You know, the risk management, etc., in a broader context, you know, and how does it support the decision making process? I think what is important to understand that it is an informed decision making process, informed. Okay, so okay, because risk management is helping us basically, you know, to understand the potential upside as well as the downside. Okay, so the kind of risk reward relationship, that's what I see. Okay, so and it also kind of identifies the strategic options. The other one is the resource allocation. Of course, the organizational resources, you know, the financial, the human, you know, and the technological are usually a bit limited. Okay, so that's another one. Protecting the value, you know, in the treasury environment and the treasury risk management, what we're trying to achieve is to protect basically the value that we are trying to create. So it's not only like, okay, we make profit, but we want to protect it as well, you know, in the various mechanisms. So enabling the innovation, basically. That's important because the more we innovate that area, that will also help us. It also, I guess, it also decreases cost in the long term, protecting margins and things like that. Okay, of course, the stakeholders are important as well because they're ultimately the big decision makers overall of the strategy. So there should be like a transparent risk management model on the table. Okay, that's very, very important. Of course, then you have the regulatory framework as well that we should not forget. And of course, depending to the industry we're in, but let's assume the financial industry only, we have the regulators, of course, there. Then, of course, what's another important area is the, I call it the scenario planning, So, which means we should think, in a subset of ideas, planning and looking at how this risk, kind of how it is spreading out. Okay, so, and of course, having a strategic flexibility, we should increase that potential at the same time. Okay, and there should be some alignment at a cultural level, based on organization, cultural level, etc. Okay, so in other words, if I want to like summarize that, that kind of an idea, then I think it's not just about risk management, not just about the negative outcomes. Okay, because normally, when we are having a proposal on the table or something like that, then the first thing we look at is the negative outcome. Okay, so really it's a balance, optimizing the opportunity at the same time, and limiting, the risks where we can.
Okay, so very well said. Informed decision, resource allocation, protecting values, and enabling innovations. Very well said. Very well said. Can I move to my next question?
Okay.
Okay, my next question is that how do companies, very important question, I think, how do companies effectively balance a risk mitigation with the pursuit of growth and innovation?
Yeah, it's difficult because, of course, you talk about across the board, and of course, I don't have complete oversight, over every company in the world, obviously, or every financial institution. But if you look at, let's say, the subject, balancing the, the risk mitigation, which is actually kind of like pointing out to the previous question, balance between the negative and the positive, etc., of outcome. Okay, so basically balancing risk mitigation, trying to achieve the growth, basically, is really, I would believe it's very challenging for a lot of organizations. I really think it is. Okay, so, but if I look at what I have undergone and what I have seen, basically, if you look at the risk assessment and the management area, okay, I think they are starting more to understand this subject more than ever. There's a lot of education out there, and I think that a lot of people are opting also to deepen their knowledge in that area. So, but one of the tools, of course, that I believe is important when we are managing, risk assessment is, for example, a SWOT analysis. It's a very simple, which actually in abbreviation, it actually means strength, weakness, opportunities, and threats. I mean, we all know it's SWOT. Okay, so then, of course, when we talk about in the risk assessment of a portfolio, for example, then we should understand that we should have a diversified approach. We should not put all our eggs in one basket. Okay, that is where most people make the mistake. You hear someone like, oh, I lost money, or the company lost money in a particular financial instrument. But actually, if you read between the lines, of course you don't have always full insight, then you understand that they are not diversified enough. Okay, so cultivate a culture of experimentation. And that doesn't mean to say that we just let loose and go and try anything, possible. Of course, we have regulations, we have a framework. Okay, so this is basically within the framework that we are operating. Okay, so then of course feedback is very important. The feedback that you get within the organization, the professionals sitting together and say, hey, listen, how can we basically make adjustments and things like that. So of course, hedging strategies, very, very important. Actually, in the course, this is really an interesting subject, that we're going to have on the 18th of September till the 22nd. So, and then, of course, a cross-functional collaboration. A lot of organizations have islands, and when I mean islands, it means when you have things to do and you want to cooperate together, suddenly you're like, hey, I have nothing to do with that, things like that. So that is an issue. So set clear expectations and boundaries, contingency planning, stay informed, and embrace technology.
Okay, have you finished?
You can go for the next question.
Okay, very well said. Risk assessment, diversified portfolio, cultivate a culture of experimentation, R&D, research, and about. Okay, very well said. My next question is again very important question, I think. Do you believe that the integration of technology significantly enhance the efficiency and effectiveness of risk management practices? Yes, very important question.
Yeah, I think it's a good one. Honestly, I think the integration of technology really has reshaped risk environment. It really has. Okay, in all sectors, really, all sectors. So basically, if you want to think about some situations, I always like to, when you talk about the concept, it's also important to understand that these concepts are applied in the real world, right? So for example, if you looked at the traditional, credit risk management in banking, for example, I think that that might highlight, the question a bit better. So what happened in the past? Banks assessed their credit worthiness of individual borrowers primarily based on manual process. Everything was done, manual calculations, you name it. Okay, so they look at the credit history, and things like that. So and statements and all the other things. Okay, so that was very time consuming. And of course, in today's world, we have a lot of technology that actually help us to speed up matters. We can attach scoring, we can, do many, many things. And that really also will help us, to be more innovative and have time for other things to do within the organization, so, okay, so, and moreover, of course, the integration of the technology, advanced credit scoring models, like I mentioned, okay, so yeah, I think in big lines, I think that is covering that, I believe, and it will answer the question.
Okay, have you finished?
Yes.
Okay, so integration of technology, very well said. Data aggregation, predictive analysis, real-time processing, portfolio analysis, and automated monitoring.
Exactly.
Very well said.
Correct.
Very well said.
Correct.
Okay,
Correct.
move to my next question, which is that, okay, do you have any idea, Peter, any practical strategies for aligning treasury risk management within organizational long-term goals?
Very good question. I like it. Yeah, good. Whoever asked the question, it's really good. I like it.
Thank you.
Yeah, of course. I mean, we have to say that treasury risk management plays a very important role, in any organizations, really, across the board. So, because it will make sure that the organization financial health and stabilities are being met. That is very important. Okay, so some of the practical strategies, because I like to be practical, not just theory and academic, right? So what is important? We should understand, the business vision and goals. Very important. Okay, so we should have an understand what the long-term vision is and the objectives. Okay, so And that will help to give a direction, basically, for the Treasury function, okay? Integrated planning, okay? So this is also important. The Treasury should basically be involved in organizations' strategic planning. It's important, because if they're missed out, we might miss actually important criteria and requirements as well on the Treasury side as well. Okay, so we should have very clear policies in place, and of course, the regulatory environment really demands, proper policy and procedures, obviously, so that actually the framework is protected. Okay, so there should be regular communication across the organization. Okay, so that means other departments, senior management, and to the board. Okay, so whichever way that channel basically functions. Invest in technology. And investing in technology doesn't necessarily mean that you have a high volume environment. Okay, so that is something to understand. Stay updated. That means every day goes by, there's something new on the market or on the table. So diversify the funding sources. When we talk about, looking at the planning of the organization in a financial sense. Okay, and of course, review whatever planning strategies you have. Review that regularly, and training and development. And that's why all of you are here today, obviously. It's also very important criteria and area, because continuous learning, I think, will solidify and strengthen the organization capability of being in competition with others. Okay, so stakeholder engagement, that was this board level discussions I had, and of course performance matrix, etc., and crisis management plan.
Okay. So Peter, can I move to my last question, because our time is running out?
Yes.
And only 3 minutes are left. So my last question is that, what is the most valuable piece of advice you would offer to someone entering the field of treasury risk management? My last question.
Okay. Can you repeat the question, please? Because I didn't hear
What is the
proper.
most valuable piece of advice you would offer to someone entering the field of treasury risk management?
Yeah, okay. That's a good question. Yeah, I mean, basically my advice is, okay, if you are, let's say, kind of connected to the Treasury, that of course makes it a lot easier than if you're completely an outsider. Okay, so, but my advice is anyone that would like to, first step, you want to be in that profession, is make sure that you start looking at certifications, because nowadays it's all about certification. So get a certified Treasury professional certification from let's say the proper organizations that are providing those programs like the ACI and all that. So secondly, have really a passion about financial markets. You can be very good in numbers. You could be a financial analyst. You can be an economist. I mean, I have worked with people coming from they were economists actually, and they became a Treasury professional. Even accountants I have seen, The point is, be passionate about it, learn about the profession, learn about financial markets. If you are, willing even, to do a bit of private trading or something like that, it gives you then a taste also of what Treasury actually is doing. Because when you're investing or you're buying and selling of currencies, it will be very useful, because if one day you have an interview and they ask you, what do you do with your private life? And you say, well, hey, one of my activities are investing. Maybe I'm not large investor, but I'm learning, the financial market. So by being actively a participant in, doing this privately, obviously I have a lot of interest in doing this professionally. So, yeah, that's what I would do if I had to start, like that.
Okay, so viewers, that's all for today. Thanks for being with us. This is me, Rehan, signing off. So viewers, we would like to see you there in Treasury Risk Management, which is going to be held in next month at Grand Hyatt Hotel Dubai in between 18 to 22